You're listening to AI Prism from Seoul Economic Daily.
If you hold Samsung electronic stock or any Korea tracking ETF, July 7th is the date to circle on your calendar. Samsung is expected to post an operating profit of 85 trillion won, or roughly 55 billion US dollars. It's Monday, July 6th. Let's look at what this means for retail investors in Korea. Today, we're doing a deep dive into Seoul Economic Daily reports and market data to really figure out our mission here, which is how structural tax loopholes and these unprecedented tech profits are creating a perfect storm for Korean ETF markets.
Yeah, and to really grasp the sheer scale of that number, if that 85 trillion won consensus estimate holds, Samsung would actually unseat Nvidia for the highest single quarter profit ever reported by a technology company in recorded corporate history.
Wait, really? I mean, I have to push back here. If everyone already knows Samsung is going to post this massive 85 trillion won profit, isn't it, already priced in? Like, why are we seeing retail investors scrambling right now instead of just holding steady?
Well, because we aren't just looking at a static number on a balance sheet. The sheer volume of capital moving around this expectation it's fundamentally altering market mechanics.
So Samsung stock is acting like a massive gravity well. Because it makes up such a huge percentage of the KOSPI index, its massive price movements are just pulling the entire ETF ecosystem out of orbit. And I'm looking at how investors are reacting to that. Individual Korean retail investors have net bought 2 trillion won, which is roughly 1.3 billion US dollars, in just the KOSPI200 target weekly covered call ETF this year alone.
Right, which is huge. That influx pushes its total assets under management over 6 trillion won, or about $4 billion.
Yeah.
And to understand why they're pouring billions into covered calls right as a massive tech rally is expected, you really have to look at the structural advantages in the tax code.
Yeah, because for those unfamiliar, a covered call ETF caps your upside in exchange for steady income. Capping your upside right before Samsung drops a historic $55 billion profit bomb seems totally counterintuitive, unless there's a tax loophole that's just too good to pass up.
You nailed it. In Korea, covered call ETFs distribute monthly income sourced from options premium revenue. And under current Korean tax rules, that premium income is completely exempt from withholding tax.
Oh, wow. So it's completely excluded from the comprehensive financial income tax calculation.
Exactly. So investors are heavily incentivized to lock in that tax-free income, over chasing taxable capital gains.
Okay, so we have domestic retail investors pouring billions into these complex domestic ETFs to dodge taxes. But on July 10th, the entire playing field shifts because foreign retail money is about to enter the chat directly via the new SK Hynix American Depositary Receipt, or ADR listing, on a U.S. exchange.
Yeah, that listing gives international retail investors direct dollar-denominated access to SK Hynix for the very first time. You're injecting a massive new stream of foreign capital into an ecosystem that's, already strained by domestic retail cash and leveraged products.
Which brings us right back to that gravity well effect, right? If you're looking at your portfolio and wondering why your Korea tracking ETF isn't matching the index's actual value, you're experiencing this firsthand. I mean, in June, we saw an all-time monthly record of 12,299 ETF tracking error disclosures.
Yeah, and we should probably explain how a tracking error actually happens here. Because when heavyweight stocks like Samsung or SK Hynix move incredibly fast due to these huge capital inflows, the ETF market makers physically cannot buy or sell the underlying assets fast enough.
So they just can't match the ETF's price on your screen with its actual net asset value, or NAV.
Precisely. The extreme volatility creates a severe price to NAV disconnect. Basically, the ETF machinery is just breaking a sweat trying to keep up with the math.
Right. The system is just struggling under the gravitational pull of these unprecedented tech valuations and those massive capital flows. So Samsung's July 7 results are the defining data point this week, directly impacting holders of KSPI-linked products, since Samsung and SK Hynix comprise approximately 60% of the index.
The historic surge in covered call ETF inflows alongside record tracking errors reveals that investors are actively managing for extreme volatility in income generation.
Whether you are eyeing the new SK Hynix ADR or watching for Korea's IMF GDP upgrade on July 8, grasping these underlying ETF mechanics is essential to navigating the next big earnings-driven swing. That's today's AI Prism. Retail investors. This deep dive was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.